A little knowledge that acts is worth infinitely more than much knowledge that is idle. Khalil Gibran. My friends, action. That's what we have to take each and every day, 10 to 15 minutes. We talk about that every day because it is the key to mastering the charts, is putting in the time. You just have to put in the time. Don't worry about how long it takes. When you master the charts, you'll make up for all the time you ever spent. But you can't cram for this. This is not high school or college. You can't cram for the exam. This is more like farming. You have to plant the seed. You have to water it. You have to work the ground. You have to keep the weeds away. You have to keep moving forward. Your fertilizer is being here each and every day, 10 to 15 minutes, following these stock charts. Your favorite ones, learning, adding to that knowledge base, listening to the videos we put out each and every day. You have to subscribe at chartingwealth.com to get those. Cost you nothing. List is never sold, never spammed. Just go there. If you appreciate what we do here, support us at Patreon. Even more good stuff for that. You get, of course, immediately our Options Made Simple, the Charting Wealth Way 3-part video series. Top grade stuff, help you understand options and jump right on it so you can start practice trading those if you're interested in those. And of course, every week you get Charting Cryptos, Commodities, and Currencies early. We put that out on Friday for the rest of the world. And of course, you get our 3-wave trades. Those are curated liquid options and liquid stocks. Many of them do have options, and ETFs that we curate for you and present to you. And of course, the 20 weekly vertical crossovers that we strive for every week on the S&P 500. Those are big stocks that are going up or down. They're switching. So let's jump into these charts right now. What do we see going on? We see stocks, gold, Bitcoin up, bonds down. Now, nothing's roaring today. S&P 500 up 0.27%. Let's look at where we were this last week. The high last week, 456.43. The high this week, 456.74. So we are hitting a higher high. Things going in the right direction. You can see we're well above the weekly trend line on the 2-day and the half-day. So again, this is the market that just won't quit. If you would have jumped in with us when this first turned, you would have jumped in worst on that first week. You would have jumped in at 402.49. If you would have hung around and not trusted the spinning top and jumped in the next week at the worst part, you would have jumped in at 409.70 to a high so far. This is from late March, early April, all the way until getting toward the end of July. The latest high, 456.74 from 409 or 402. Not bad, my friends. Not bad at all for just following the charts. That's how simple it can be. Now, this is, again, somewhat unprecedented. Just crazy, crazy move. I can't explain it. But I can tell you that riding that wave is sweet. You would have done really well in your practice trade. I always add that word practice in because we're not a stock calling service. We're an education firm. We don't give you market advice. We're here to educate you so that you can learn from us all the books you read, all the courses you take, all that you put into this. You really have to develop your own individual style of trading, which you will do over time. And once you get good, then and only then you make up your own mind to spend your own money the way you want to spend it. We don't take any responsibility for that. We don't give market advice. Let's see where we are with the Qs. The NASDAQ 100 up 0.68% is our big up for the day. Now again, you can see it's not reached the high of last week yet. You can see this latest 2-day candle that again finished drawing today. It started on Monday and ended today. Is the prior one was a doji. This one's a red spinning top. You can see where its bottom wick touched, came really close to touching that weekly trend line there. You can see where the half day ended its down move yesterday, and then up in the morning, up in the afternoon, not quite bouncing off that weekly trend line. So we'll keep our eye on things, see how it continues to go. Not pulling anything yet, of course. I mean, we've seen some, we can look and see where on this half-day chart in particular, it goes from green to red, and again has just continued to pull up this whole time for all these weeks and months now. So that is where we are on our two stock indexes. Let's move on to 20-year bonds. Now, again, I told you I didn't feel good about doing anything in 20-year bonds, not jumping into anything after we had those 2 weeks of down movement. Last week was a sort of a crappy green candle. This week is a doji so far. We can see we had 6 days of up movement and 2 days of winding down movement. 4 days, two 2-day candles. So we're above that prior trend line, but not doing anything spectacular. That's on the weekly trend line on the 2-day chart. The weekly trend line on the half-day chart, we can again see things meandered up and then over the last many days sort of sliding sideways and down. So we don't have any good trend for us to jump on right now when it comes to bonds. That's what a crappy chart looks like. We've seen some good movement in the past. Not saying I'm giving up on bonds, just here lately it's been crappy. That happens in charts. Learn that. Not every chart all the time works right. Sometimes they go through seasons where they just get sloppy. And what do you wait for? Them to straighten themselves out, which hopefully bonds will do it. They have in the past over and over again. Bitcoin, that's another matter. We'll talk about that in a minute. What do we see going on with gold? Well, gold, again, pushed itself up some today after 1, 2, 3 days of down movement. On the half-day chart, we can see at a doji in the morning, up movement in the afternoon, ended up the day 0.56% up. Nonetheless, we have a red down candle. We can see not much of a wick going up, a wick going down, and you see how I'm moving this dashed line because it will deceive you, and you'll see the dashes and think that they are wicks. They are not, so you have to be careful when you're making those calls. And of course, as we look at this week's weekly chart, we can see that what occurred last week, we have not reached that up move yet. A little worried about gold. We'll continue to keep an eye on things, see where it goes. Now, Bitcoin. We can see where Bitcoin has moved down, slid sideways, dropped down again. Up for the day, 0.37%, not much. Still looks like it's in that downward slide, heading down. So again, and it's below the trend line on both the weekly and the 2-day. I'm sorry, it is on the weekly and the 2-day. It's heading down, but also on the half day. As we look at it, even though we did have a bit up movement today, nothing to help us with all the recent down movement. Again, after not so good an up movement, you can see when things changed over back on the 20th, we pretty much hit the peak where Bitcoin moved over those following 3 weeks after the beginning up movement. That's not the kind of chart I want to jump into. I don't want to jump into something that already hit its peak in the first week and then just slides sideways and dies after that. We keep hoping Bitcoin's going to get its act together and start being a chart that is chartable, something that looks more like, say, the S&P 500, where, yes, here lately that's great, but you go back in the past. We go back a year, over a year, we have one false pull up, and then everything else is pretty much clean. And we have many times enough space to get in or at least to get out of a move before it kills us. But in most of all of them, except maybe one, we have over the last year, we have the ability to jump in and ride it up or jump in and ride it down. For those of you not familiar with riding the stock market down, going short, it's easy on something like the S&P 500. You have SH. What is that? Well, that's the ProShares Short Fund. And look at what it's been doing as the market's been going up. It's been going down. What does it do, though, when the market goes down? It goes up. And, of course, it's inexpensive per share. and you can practice trade that when the market goes down. That's a good thing to do because these short funds act differently than your typical underlying fund, than SPY itself. They're revalued much more often, and again, you can see when things don't go in your direction, they can magnify your losses a little bit. Again, if you're doing these highly leveraged funds where you've got 3 times and all, those are crazy. And of course, the fees are higher, so you have to balance all that off. That's why I want you to practice trade it and see how you can do. So again, that's what it's all about, learning by doing. My friends, thanks so much for being with us. We always love to hear from you. CW@chartingwealth.com. God bless all the best from the whole team at Charting Wealth World Headquarters.